What's up, guys? How you doing? What's up, guys? Good to see you. Can you all hear me okay? Perfect, my bro. Give it 5 minutes and then I'll start. Perfect, bro. How's everyone doing? Everyone had a good weekend? Morning, man. How you doing? All good, thank you. So in terms of trading plan, does everyone have a trading plan, like a set one they can follow every day? Or is it sort of like still discovering one or never thought about it? Nice, nice. So, but yeah, I won't waste any more time. I'll get started. So again, if you have any questions or anything, obviously just put them in the chat at any time. So in terms of the trading plan to become profitable, first thing we're gonna ask ourselves is the type of trader we are. Okay. Because when it comes to trading, there's lots of different types of traders you could have. You can be a day trader, a swing trader, a scalper. It all depends on your schedule. So I think the main thing is how much time do you have during the day? Like for example, if you're free between 9:30 to 4, right, New York time, then that's perfect. You can trade the New York session. You can be a day trader. That's fine. If you don't have time, let's say you're only free 1 hour a day, or you have a job, for example, between 9 to 5, so you can't really check the screens, then you can be a swing trader. So you can be a day trader where you can actually check the screens quite often, or you can be a swing trader where you don't have to check the screens so often, right? For example, we'll get into the trading model next as well, but the trading model will work on any time frame. But if you're a day trader, you're going to be able to, for example, trade the 15-minute chart or the 1 minute chart because you have the time to look at the candles. But let's say you don't, you can trade the 4 hour chart, or you can trade the daily chart, or you can trade the weekly chart, and you can just have alerts set at those levels. So the first thing is you need to decide, are you going to be a day trader or are you going to be a swing trader? And the thing I recommend is if you are going to be a day trader, you are going to sort of need a bit of like unfocused attention. I'm not saying like you have to be extremely locked in for 8 hours, no, but you do have to sort of like have that attention where if you see a trade, you're going to be able to take it and you're going to be able to follow your stop loss or take profit without like being distracted or having to go somewhere. So then that messes up your trading plan. So yeah, the first thing you want to decide is what type of trader you are. Are you a day trader or are you going to be a swing trader? Then the next step is, let me just delete this. Okay, and that also comes into the type of trader you are, is the actual times of day you're trading. Because there's three types of sessions, right? You have the New York session, you have the London session, and you have the Asian session. So let's say I just go into the chart here, right? This you get these areas of consolidation and you get these nice big moves. And ideally, you want to trade these nice big moves when there's volatility, right? Because you can only make money at the end of the day if price is moving up or price is moving down. In areas like this, it's not ideal, right? You're not going to make really any money if you are trading this type of market environment. So you have three sessions. You have the New York, you have the London, and you have the Asia. So New York is going to be between 8:30 to 4 p.m. London's going to be between around 1 to 7 a.m. This is all New York time. And Asian just going to be the overnight session. So when the market closes at 4 p.m. and at 5 p.m. technically it reopens at 6 p.m. So it'll be between like 6 p.m. at night to like the midnight. Basically overnight, if that makes sense. All New York time. So which session are you going to trade? Well, ideally, I'm always going to recommend sticking to New York and sticking to London. Because if you see, like, for example, this area here, this is the Asian session. This area here, this is the Asian session. Find more examples. This session here, right? Overnight. So the market closes at 3, sorry, 4, sorry. And then we reopen at 6. And then can you see we just completely chop around, right? This is the Asian session. So again here, the market closes at reopens at 6 p.m. and then we just chop around. So I'm always going to recommend trading New York session or the London session, and then you have sort of kill zones within these sessions where there's even more volatility. So in the New York session, the best times I would say are between 8:30 a.m. to 1 p.m. right? And London, I would say 2 to 6 a.m. So I don't think kill zones are as important. Like it's not the be all ends all. The actual session is more important. But let's say you only have 4 hours a day or you only have 3 hours a day. If you could base it around the kill zone session instead of that, or base it around the London kill zone session instead of just waiting those 6 hours, that would be better. So now going back to the trading plan, right? The first thing was we want the type of trader and I want to say I'll just do a different one. The time of day. Right, what time of day can you every day hop on the charts, not be so distracted, and ideally around those sessions we just talked about here. So are you going to trade London session? Are you going to trade New York session? If so, are you going to trade the kill zones or are you just going to trade the normal session? So that is the first two criterias. And now the third one, of course, is the actual trading strategy in itself. Right, and the good thing about this strategy is it will work on any time frame. So whether you are swinging or you are a day trader, that's fine. So we'll get into the actual strategy now as well, and then we'll explain the importance, etc., of a strategy. So the whole strategy is based on market structure, right? Because all we want to do is just continue with market structure. Because if a market is in an uptrend or a market is in a downtrend, it's always going to move like this. It's just going to not look as clean as this on the charts, but it will just continuously be putting in higher highs and higher lows, for example, in a uptrend. So all we want to do is catch the continuation higher. That's all we're going to do. So as price leaves this range here, right, we had a high and we had a low. So we have a zone created here. This is our previous range. So all we want is for price to come back in and look for a potential opportunity between this high and this low. Because in a healthy market environment, we're always going to retest the previous range, right? And then continue with the trend. Right? And you'll also find a lot of the times if we do something like this, right? You can backtest it on your charts after if you want, but if we do something like this, right? Can you see we had a high, we had a low. So we had this range here. And in a healthy market environment, price will retest this range and then continue higher. But we never did. So this is what we call unmitigated, or I'll just keep it simple and say untapped. Right, so we've never tapped into this zone here. And now we've created a new zone. High, low. Right, and we've broken through here. So a lot of people are going to think it's a change of character, right? Because we've closed below this protected low. But if you have an untapped zone just below, you'll find a lot of times all price is doing is coming into here to mitigate it, to actually fill in the orders and then continue higher. So that's why tracking your zones is super important. You will save yourself a lot from getting faked change of character. And you might, instead of looking for sells here and then you get stopped out again, you think, oh, why was there a change of character? But then it actually continued in the intended direction. If you have an untapped zone below, all it's doing is filling in this zone and then continuing higher. Right? And it's going to be the same thing in a downtrend. All we're going to do is always just continue with the trend. So we had a high. So we had a low, we had a high. So we're going to draw a zone here. And then we're going to expect price to tap into here, which we did. We tapped into the previous range and we continued lower. Perfect. And then what do? We create a new zone here. So what we're expecting? We're expecting price to tap into here and then continue lower. Perfect. But again, if we do the same thing where we leave a unmitigated zone, all right, so let's say we do something like this. Right, a lot of people think, oh, right, so if we just trail our highs and lows, we had a low, high, low, high, lower, low. So a lot of people are going to think, oh, change of character. And they're going to start looking for buys. And I get market structure, technically, you would say, oh, we've made a higher high. We should now expect higher highs and higher lows. But again, here, can you see we have a untapped zone? We never came back to mitigate this zone here. It's untapped. So if price does tap into this zone now, this is a very valid spot for it now to continue lower. And then this here would just be your liquidity sweep. So again, if you just, all you have to do honestly is just trail your highs and lows and see how price is reacting to these highs and lows. So now we'll get into the actual entry model and go through some examples. So let me get the actual entry model up. All right. So again, you can see this in the My Strategy tab. Everyone has access to it too. But the bearish setup. So all we have to do, right, is count to 6. So this is the 5-minute time frame. And like I said earlier, when we were talking about the trading strategy, and if you're a day trader or a swing trader, it's going to be the exact same thing, just different candles. If you're a day trader, you might be taking it on the 1-minute time frame or the 5-minute time frame or 15-minute time frame. If you're a swing trader, you're looking for the exact same thing, but you're just looking for example, on the 4-hour time frame or the 1 day or the 1 hour. So you have more time. So all we're going to look for is count to our 6, right? So our 1, we'll just do it step by step. Our 1 has to be a valid low. Okay. And as we can see in this situation here, we have a valid low. But what did I talk about earlier? Sorry. All I said was all we're going to do is continue with the market structure. All right, that's all we don't do. We never want to try guess reversal and think this is going to be the bottom of the market. Or this is going to be the top of the market. All we're going to always do, because 70% of the time, the market's going to follow its structure. So if you're right 70% of the time, instead of trying to guess the 30% when we get a real change of character, you're going to be a lot more profitable. So we can clearly see we are trending down, right? So why am I going to be looking for buys, trying to time the bottom of the market, saying this is going to be the bottom, and we're going to rock it all the way up here? All I'm going to do is continue with the trend until the market tells me otherwise. And right now, the market hasn't told me otherwise. So all I'm doing is looking for sells. All right. So then when we look at the setup, now we'll take it one by one. So number one is a valid low. And as we can see here, we have that low. Number two is a valid high. As we can see here, is our high. So number one and two creates the zone. So this here is our zone. Now, I don't know if you've heard about liquidity or not. Some of you guys. So all liquidity is liquidity. I'll do a very quick review. Liquidity is sort of the fuel, what moves the market. So if price wants to continue up, right, we need to take out a low first. Right, so let's say we have lows of lows here. Right, price needs to take out this low in order to get that fuel in order to continue up with the trend. So that is our liquidity, and it's the exact same thing on a downtrend. Right, if price wants to continue lower, right, we need to take out some sort of high first, and then that's the fuel. Right, this area here, once we sweep all this liquidity, so price will come back above here, stop out everybody, and then continue lower. That is a liquidity sweep when we're looking for sells. So we need to incorporate this liquidity when we come into our strategy. So again, though, just going to follow. That's our one, that's our two. A three is the breakout of the zone. We break out of the zone here. Perfect. A four is a tap back in. Sweet, we tap back in. But the tap back has to break structure, right? We have to break some sort of structure. And we broke this low here, so this is a valid tap. So that's our 5. And then we need a 6. We need this to get swept. This is liquidity. We sweep it. And then we need a valid high to form, sorry, in this situation. So all we need is a valid high to form, and then we have our 6. So I'll just wait price out. We haven't quite got it yet. Play price out. Okay, that here is our valid high. So we're just going to sell, right? You can put your stop loss above and just target the lows we came from. So you can see here we had equal lows and we came from this low, right? So we always want to target the low we came from, and we came from this low. Yes, you can hold and you can scale some out here. And you can scale some out here. That's no problem. But the majority of the time, I'm going to take the majority position at the low we came from. So now play price out. And then we hit our take profit. Yes, we did sweep this low, but I'm not going to lie to you. I would have taken off at least 80 to 90% of my position at these lows here. So that is the bearish setup. If anyone has any questions, just let me know. But it's the same thing, right? We're just following structure. And we're marking out our zones. All right, so now instead of thinking this is a change of character, this is actually a liquidity sweep, and then we get our move to the downside. Yeah, that's a real good question, and that's exactly what we're going to get into now. So again, swing trader, right? Hourly time frame. So let's say you're swinging and you're on the hourly time frame. So again, first thing we're going to do, right, is follow the structure, but it's going to be the exact same thing, right? Are we likely to head higher, or are we likely to head lower? Well, what is structure doing? We can see we put in a low, high, low, high, low, high. So technically, right, we took out this high here, right? So we broke a high, right? We created a new high, and then we took out this high as well. So if we're taking out highs and we're respecting lows right now, right? Just using common sense, really. Like it's not that hard to spot. We can see that we are trending upwards, right? Price is likely to continue up. So all I'm going to do is try to catch a piece of that. I'm not going to try again, try to time the top or try to time bottom of the market. I'm just going to try to catch a piece as we continue to move up. So what do we have here, right? Here we can see we have a potential. So let me get the bullish setup picture up so you can compare it. Again, it's going to be the same, exact same thing. So like I said, here we have tap, sweep, flip. So that's all we're going to need. So here is our zone. We have a high to a low. Okay, that was the zone we created. Now, so that's our high, that's our low. That's 1 and 2. 3 is a breakout of the zone. Can you see here we broke out of the zone? Nice. 4 is when we tap back in. We tap back in. But the tap back has to, as it says here, right? It says we have to break structure. And we can see here, we break structure. Okay, perfect. 5 is the new high that's created. And 6 is when we sweep 4 and form a valid low. So this was 4. We need to sweep this. Yeah, it doesn't matter if it's Forex, futures. You could literally be trading NQ. You could be trading the dollar, GBP, exact same thing. It really doesn't matter. Because again, market structure is the same on any chart, right? Any chart's either going to be putting in higher highs or higher lows, or going to be putting in lower highs and lower lows. That's regardless of the chart. Any chart's going to be moving up or it's going to be moving down at the end of the day. And that's all we need to make money, really. So again, we have our 1, 2, 3, 4, 5. So what do we need? We need this to get swept and then a continuation up. Because again, the market's not just going to come up from anywhere. We need to get fuel. We need to stop people out. And this is our forward. This is our liquidity. So once this gets stopped out, right, perfect. We've swept liquidity here. But that doesn't mean we just buy. We need that confirmation, right? Which is the valid low. We haven't got that yet. Haven't got that yet. This here is the valid low confirmation. So you would buy here, put your stop loss below, and you can simply target. So I would target just below the high we came from, but if you wanted to, you could target the high we came from. And perfect. We hit our take profit. So if we look at this, right? If we look at this back at the original thing, right? Which was the type of trader we are we a swing trader or are we a day trader? So if you were a swing trader and you were using this, right? You're what do you mean by that, bro? The confirmation is a valid low to be formed kind of thing. Because it sweeps on the hourly, would you go down to the 1 minute to get a better entry? Yes, you can do that, but it wouldn't be super necessary. So once you get the valid low confirmation, so the best way I would do that is if your valid low is put in a bit high. For example, right, once we get that confirmation on the hourly time frame, right, that confirmation happens here. And this might be a bit high for you. Maybe you don't want to buy it all the way up here because let's say your stop loss is below and your target is here, right? Let's say that's about a 1 to 1.5 risk to reward. Let's say we're going to get into it in the next step of our trading plan, right? But let's say your trading plan says ideally you should be getting at least 1 to 2s. Well, then you're not going to take this trade because it's outside your trading plan. So based on that, you would look for a more refined entry. So based on our strategy, right? Based on this strategy, we should now respect this low and we should continue higher. So what you could do is you could draw, if you're on the hourly time frame, you could draw this candle here that validated our low. So I'll draw this candle here. That was my valid low on the hourly. So I know if my trading thesis is correct, we should not go below this low and we should eventually put in a higher high. So if I don't want to buy up here, I'll wait for a move further down into here and then look for confirmation on a lower time frame. So we'll play it out, right? All right, we came down to here and then we continued up, and we'll see what that looks like on the 1 minute time frame. So of course, on the 1 minute time frame, it's going to be huge, however, but on the 1 minute time frame, it's this zone here. So it looks a lot bigger, but we're just following what we're doing on the hourly. So all we would expect is the same thing. You would want some sort of liquidity to get swept. So we had all these lows here, we swept it, and then form a valid low, which we get here, and then take that buy. But because obviously going from the hourly to the 1 minute is a bit big, you could go down to the 5 minute instead. See what we get there. Okay, the same thing, or you could use the 15 minute. All right, it's the same thing. For example, on the 15 minute, if you did this thing, you just count to your 6. You'd get your 1, 2, 3, 4, 5. All right, that's your sweep. And then you'd wait for a valid low to get put in. And if you know what, like probably do from live trading, I would like taking at least from 30% of the zone. So you get a valid low put in somewhere here, at least 30% of the zone, and you can take your long. So yes, you can further refine it if you want like an exact entry of this risk reward is 2 inches, or you could keep it simply. You could literally just say, okay, this is too high for me to buy. I'm just gonna set a limit order here. You don't need to further refine it because you do have your setup. So you can say, okay, I'm just going to set a limit order here. That way my risk to reward is better. And you have less stress as well trying to time the exact bottom. But yeah, but so if you are swing trading and you saw this setup, right, you would, this setup, you probably would have seen the potential once we put in this new high. So around the 28th of June, you said, okay, we had a zone, we tapped back, we created. This is a potential setup, 28th of June. Their setup came on the 1st of July, and then you hit your take profit on the 3rd of July. So it's sort of like a 4 to 5 day setup. This was over the weekend, so you saw it on Friday, you took the trade on Monday, and you took your profit on Wednesday. Like that is the swing trading I'm talking about. You don't really need to analyze now every little move because you've decided the type of trader you are is a swing trader. Um, what is the confirmation on in that example? So, well, the confirmation in this example was just our valid low being formed. If you don't know exactly what a valid low is, it's going to take like quite a bit to explain, but you can just watch the free video course and you understand it that way. So that is the two setups. Now the third thing, or the fourth thing, sorry, that is more important. So this is more important than the strategy. Everyone thinks that technical analysis is the most important thing, but it's really not, because the purpose of the strategy, right? The whole reason we have a trading strategy, and everyone I know when it comes to trading, everyone wants like the holy grail when it comes to trading, and they want to improve their technical analysis to the point where they'll never take a loss. But that's never ever going to be the case. And yes, I know I just showed 2 trades and they were both winners, but the truth is like you're always going to take losses, like just like any other strat, right? If I showed you the last 10 trades with this strategy, yes, there's 100% losses. But it's not about being right all the time. It's about having good risk management and psychology. So you're going to have a statistical advantage. So you will be profitable. So we need to know this is where our risk management is going to come into play to help us define our edge. But the strategy is like, it's not a holy grail. This isn't the holy grail. It's just a money-making edge you have over the market. So 4 is our risk management plan. Right? And this is going to help us when we deal with the losses and most importantly, stay consistent. So let's say you're on a funded account, for example, or you don't have to be funded, it can be personal. That's 5%. You want to have a defined risk you're willing to lose every single day. So let's say I only want to risk 1% of my account. Right? So I'm terrible at drawing with this tool, but let's say you only want to risk 1% of your account every single day. you have to make sure your trading plan aligns with that. So you want to also give yourself at least 2 to 3 trades a day. If you're only giving yourself 1 trade a day, that's terrible, right? Because anybody can take a loss. That's part of the game. So there's no point taking a loss, and that's it. You have to call it a day. That's not fair on yourself. So at least 2 to 3 trades a day. So for me, for example, ideally, if I have a 50K account, right, I want to make between 2 to 4K a month on that. Okay, so that's around 4 to 8% on a monthly basis. Right? Some weeks you're gonna, some months you might hit 3%, some months you might hit 7%. But on average, I want around 2 to 4K a month on that. So I need to make around, let's say, 1% a week. Right? So if I make around 1% a week, and obviously there's 20 days in a month in trading because of weekends, I don't need to now risk, for example, 2 to 3% a trade. That's stupid, right? So how I like doing it, I say, okay, I'm okay, right? My max, you want to identify sort of your max pain point where if you lose more of that, you know you're going to go on tilt. Like, what is your max pain point? And for me, my max pain point is 1% of my account. So if I lose more than 1% of my account, I know that's going to affect me psychologically, right? Anything 1% and below is fine for me. I know I can deal with that and have a fresh start the next day. So 1% for me is my pain point. So I never want to lose more than 1% a day. And I want to give myself at least 2 trades a day. At least have the chance of taking 2 trades a day before I reach that 1% max loss pain point. So what I'm going to do, all I'm going to do is risk, right, 0.5% a trade. That way, if I take 2 losses, I've lost my 2 trades. And you also, daily goal, I don't like having a daily goal because it makes you on tilt. But let's say your daily goal is, right, let's say this was a 50K account, right? So my daily goal would be 2% a day, which is $1,000 based on if I take, so my goal would be 1% a day, $500, right? I only need 1% a day. So if I'm risking 0.5 a trade, if I lose my 2 trades, right, I've lost 500 for the day. I'm calling it a day. But you also want to know like your average risk to reward. So let's say your average risk to reward now is 1.75. If I'm risking 250 with a 1.75 risk to reward, my average win is going to be 875, right? On average. So if I'm risking 250, my average win is going to be 435, right? Let's just say 440 to round it up. What is that? 437.5. So I'm risking 0.5% a trade with a 1 to 7.5 risk to reward on average. My average win is going to be 440 a day. So you don't want to be so stuck on 500 where if you're up 440, you're going to take another trade just so you hit that 500. That's stupid. If you make 440, take that for the day and call it, right? But that way, if I lose 2 trades now, my max loss for the day is 500, right? So every winning day on average will give me 440. Every losing trade on average is going to give me 250. So I know, let's say I have a bad day where I take 2 trades a day and I lose them both. I will call it a day. I won't take another trade because then I know if I've lost $500 for the day, that is my max pain point, right? If I lose more than that, I might go until I might revenge trade, I might FOMO, I might double my next position size trying to make it back. 500 for me is that max pain point. It might be different for everyone else. Your max pain point might be $100 or $1,000. It's up to you. Everyone's different. Ideally, though, I don't want your max pain point to be more than 1% of your account size. So if my max pain point is $500, that way, if I have a bad day where I lose 2 trades in a row, I will call it a day. I won't take any more trades, right? If I take one trade, I risk 0.5%, and I got a 1.75 risk reward on average, and I'm up 440, I'll call it a day, right? I've only taken one trade for the day, and I'm done. I don't need to risk giving back any more profit. Even if I see another A's plus setup, majority of the time, I'm not going to take it. And that's how you're going to see consistency, because you know if you have a bad day where you lose two trades in a row, all you need is one trade the next day, and you've made it back. So you stop yourself from over trading this, that. So the main thing I want to get out of this is you want to calculate your max pain point. So if that's 1% of your account size, whatever, this, and then do your position size. So you have at least two trades a day until you reach that pain point. Okay. And then through back testing and your strategy, etc., you want to see your average wins. Your average wins might be 1 to 5 risk to reward. It might be 1 to 10 risk to reward, but then your win rate might be only 20%, or your win rate only might be 30%. So yes, you're still profitable, but you know you might take 4 to 5 to 6 losses in a row before you are profitable. So with this strategy, it's around a 70% win rate. And around the average, my average is around 1.75 risk to reward. So I shouldn't really lose two trades in a row. But let's say your strategy, your average win rate is 20%, right? But your average risk to reward is 1 to 10, right? So even if you only win, what's that, 2 out of every 10 trades, you're still profitable. So that's fine. There's nothing wrong with that. But then if you're risking 1%, so if you're, let's say you get multiple setups a day and your max losses again is 500, right? How much do you want to give it? So with this win rate, right, you shouldn't ideally lose more than 5 trades in a row. If you do lose 5 trades in a row, then your win rate's gone below 20%. So I wouldn't risk more than $100 a trade in this scenario. That way, I've given myself at least 5 trades before I've hit my max pain point. I'm not just going to risk 500 on my first trade, especially with a 20% win rate, because I know it's likely to fail. So you've risked 100, you lost it. You risked 100, you lost it. You risked 100, you lost it. So let's say you even lose 5 trades in a row that day. Fine, you're down 500. The next day you come on the chart and it's a winner, right? Just going along with it with the win rate. On average, every 1 to 5 trades are going to be a winner, and then you're up 1,000 now. Now on Monday you lost 500. On Tuesday you gained 1,000. You're still up 500 for the week, and you haven't gone until you haven't lost 2,000 on Monday, gained 1,500 on Tuesday, and then lost another 1,000 on Wednesday, gained another 1,000 on Thursday. It may sound boring, but that's how you're going to see your consistency. So you need that risk management plan. Okay, so have a daily, your max pain point, and based on your average win rate and your risk reward, how many trades are you going to take a day until you hit that max loss? Okay, and like I said, you want to give yourself at least 2 trades a day, but also depends on your win rate. And then the last thing is to tie in along with this is calculating your position size. For those who trade futures, for example, calculate your size, i.e. your max loss based on the chart. So if you're trading on the hourly chart, right? Let's say I was trading on the hourly chart and our entry could have been here once we got the valid low. Always adjust it based on the chart. So if my position was here, my stop loss was below here, and my take profit was above here. Okay. What is my risk reward? I'm now risking 207 points. So every point is $2. So this risk on one contract is $400 for this trade. So I'm only allowed to put in one contract, right? I can't afford any more than one contract because it's going to go over. Let's say my max risk per day was $500. I can't do more than one contract because it's going to be $800, and that's going to be too much. Whereas in this scenario here, right, we sold here, stop loss was here. We're risking 33 points. So one contract is now only $66. So if I'm again, my max loss is still $500 per trade, I can risk 8 to 9 contracts. So always adjust your contract size based on your stop loss, never the other way around. You never want to risk more contracts. Let's say I want to risk, oh, but I don't want to risk one contract. I want to risk two contracts. So what I do is I'll move my stop loss up to here, and that way I can risk two contracts because now I'm risking less. And then you're gonna get stopped out, and then it's gonna go in your intended direction, and your trade thesis was still right because you shouldn't have never gone below here, but just because you wanted to make more money or risk more, you've given up the trade. So that is everything. You need to establish again what type of trader you are, day trader, swing trader. When can you actually pay focused attention into the chart? The time of day, you do New York session, London session, and are you able to do the kill zones within those? The trading strategy, right? You want to have the same strategy every single day. I don't believe you should mix like one strategy for one time frame, one strategy for the other time frame, because you're not going to see consistent results if you're doing different strategies. You need to have the consistent strategy to see consistent results. And that way as well, you can see all the common mistakes and all the common winners. And you will refine it a lot better if you're doing the same thing over and over again. And then most importantly, the risk management count plan. Calculate the max amount you're willing to lose per day. And then give yourself at least a couple trades in order to hit that. And if you've hit your goal for the day, call it a day. Do not trade. Turn off your laptop. So I know now every day I'm taking between 1 to 3 trades a day. I know that if I lose 2 trades a day, I'm calling it a day. If my first one is a big win, I'm calling it a day. And if my first one is a small win, then I'll take another small trade in order to hit my target. But that is the same rules I've been trading every single day. Max 3 trades a day, 2 losses a day, and I call it a day. And that's how you're going to stop tilt in and that. And if this is on point, then this doesn't matter. It's not the other way around. If your risk management plan is on point, if you have a daily plan that's on point, this is going to be 10 times more important than any trading strategy you follow, and it will make any trading strategy profitable. So just write these 4 steps and follow these 4 steps for at least a month of demo trading, and you should 100% see a lot more consistency in your results. So does anybody have any questions, or everyone all good? Perfect, bro. Perfect. I apologize. I know I ramble on sometimes. I know I repeat myself a lot, but I guess it's just a passion, eh? But apart from that, then I'll leave you guys to it. I have recorded this as well. I'll put it on my YouTube later on tonight. So if anyone wants to sort of rewatch it, that's perfectly fine. Any questions, of course, just shoot me a message. And apart from that, I do genuinely appreciate you guys joining. I'm going to do this every Sunday. So if you want to go through any topic at all, psychology, actual technical analysis, strategy, anything, just let me know. And then on Sunday, I can make a whole plan for that. But apart from that, thank you guys and have a good day. Thank you, bro. No problem, my bro. Thanks for joining. See you tomorrow.